the price of copper. And there you go, Chery Auto. I'll leave you with this. So no gong ceremony today. This is that one day after the typhoon, so potentially that's why they did cancel that ceremony. But it looks pretty ceremonious here today. There you go. 10% pop for Chery Auto.
Yeah, I mean, I'm sure issuers that don't get this nice first day pop would rather they get this than showing up and having that banging of the gong. Best day on record. For Chery Auto, of course. Just the latest of, again, many companies hitting this market to raise cash, and in their case, of course, they'll be using that in terms of R&D. It's also a good reminder for market investors to really brush up on Chery Auto, right? A company that's been here, has been one of China's biggest car exporters for many, many years, decades, in fact, if you trace it back to the early 2000s. In fact, there you go on your screens, right? It's at the very top. We keep focusing on some of these startups, well, newish EV players like XPeng and NIO, but yeah, this is really one of the OGs in this market. So according, in fact, to Frost & Sullivan, actually here, the automaker has remained, in fact, at the very top, the top exporting brand every year for the last 22 years. Let's get more with Bill Russo, founder and CEO of consulting and investment platform Automobility. Bill, good morning, and thank you for taking the time to speak with us again. You remind investors, if they're buying into this IPO, what exactly are they buying? What kind of automaker are they buying here?
Yeah, I think you described them as an OG. Yeah, they've been around a long time. I've been in China for 21 years, and I've known them right from the beginning. With my early days at Chrysler, we had conversations with this company. They are a traditional company. They are, I would call them legacy companies that have been making gasoline-powered vehicles for a long time. But for many years, Chery actually sold more cars outside of China than they did inside China. They have well-established distribution relationships with countries all around the world. They're selling in over 100 countries. They still predominantly sell gasoline-powered vehicles, which around the world, that's still the predominant form. But they're also the number 6 in China company overall and the number 4 company in new energy vehicles. So they're an up-and-coming entrant into the new energy vehicle race, but they're well-established in the gasoline-powered. And that gives them a leg up on competition. If you're fighting in a race with EV-only startups, you have this dual-track strategy that you could play on, where you can continue to milk the old cow, the combustion engine-powered vehicles, especially in markets which still primarily demand those, while you invest in creating the portfolio of new energy vehicles, which is what they're doing with the IPO.
Yeah, and it's interesting, right? When you look at the markets that they do export to, I think what struck me was that Russia was one of the key markets after its largest single market after China. So it seems like right now, though, there's a bit of a reset when it comes to exporting to markets like Russia, like Iran, like Cuba, that might face some regulatory risk and the risk of sanctions. What do you make of this sort of move? Is it a strategic move? And how are they going to fill the gap? And whether markets can actually fill that gap?
I would say it's opportunistic. They pivot quickly. They just opened up a strategic partnership in Iraq with a Jamil Motors, which is a Saudi-based distributor. So they have, and this is, I think, to the flexibility and the speed at which Chinese companies can pivot is amazing. They're not afraid of going to the emerging markets. I think the global automakers tend to prioritize the big, and obviously Chinese companies would like to be in the big European markets where there's better margin opportunities, but they're not afraid of taking those beachheads in smaller markets. So they will go to the global south. They will focus on and have Latin America, Middle East, and other places around the world to build up scale. That gives them the ability to compete at scale and at cost, and then that gives them the entry point to enter the bigger markets in Europe.
Bill, what's interesting about an example like this, where you have a company, to your point, maybe part legacy, it's been around for a while, but it's just now listing, is that a lot of people, for the very first time, get to see the financials of the company. And I wonder, if the temptation for the company to use the money it's raised today to compete for the future in EVs, do you think that would be a smart strategic decision on the part of the company to compete head-to-head with the likes of the XPengs, the NIOs, the BYDs?
Well, they've been in their prospectus. They've been earmarking how they're going to use the funds. Now, their aim was to raise 1.2 billion at around a $22 billion valuation. That puts them ahead of other EV startups like NIO and XPeng on total valuation. So they clearly are getting capital markets to recognize what they have here. What they also disclosed is that they're intending to use 35% of the proceeds for new market development. And that's indicative of the kind of company they are. They are the number one exporter of made in China products, automobiles around the world. The second on the list is BYD. But Chery's number one. It has been for a long, as you said, for a long time. So 35% is to grow the scale of the business in the international markets. 25% is to be allocated to next generation smart new energy vehicles. And the balance will go into continued investment in overseas expansion and upgrading their Wuhu base, which is their home operation. So they have a very clear idea what they want to do with the funds. They've been very clear on the priority being to scale the business in the international markets.
Bill, if you had to take your pick in terms of the EV space or the auto space in general in China right now, what stands out to you, right? I think what really shocked the market a few weeks ago was the fact that the number one in the EV space, BYD, is the one that really is suffering in terms of earnings now because of the price wars, because of what we're seeing competitively. How do you look at the whole EV space moving forward in the next 3 to 6 months?
Yeah, I think there's a class of competitor, BYD, clearly in the lane of I scale first and I defer profits to when I've squeezed out competition. The ability to compete in the future of mobility, especially new energy vehicles, is a race to scale. I would say companies like BYD clearly are going to be able to scale in the high-cost components, and particularly the batteries. That's their DNA. Chery is leveraging its ability to build at low cost. They are originating from a lower-tier region. They prioritize their ability to sell into lower-tier regions of China. That's been their DNA from the beginning. And they're going to leverage that by going into these emerging markets and competing on price with a mixed portfolio of new energy vehicles, and eventually, but initially as gasoline-powered vehicles. That's a lane of competition. Now, there's another lane of competition. Those are the superscalers, I would call them, BYD and Chery being clear examples of that. And then there's the lane of technology competition. That's where Xiaomi lives. That's where companies like Li Auto and NIO and XPeng live. Those are the two emerging lanes of competition coming from China.
Bill, final question for you. You know, you speak with a lot of American companies, of course, involved in China's car industry. People talk about, and they seem to focus on the fact that Chinese names are competing with foreign names. But when you look across that supply chain, are there opportunities in that Chinese auto supply chain for foreign companies to get involved?
I think that is the way forward for the global auto industry. Unfortunately, we've conflated geopolitics with economics in a way that's detrimental to the sustaining business performance of the global auto industry. There's no road to the future of electric mobility that doesn't, at least for the near term, engage at a level the Chinese supply chain. I would argue it's not just about the acquiring batteries; it's also the power electronics that are needed in the vehicle. You need to build them at large volumes in order to drive down cost and price competitiveness are going to be essential if you're going to compete in the future of mobility. That's going to include Chinese companies going global. So the future of the industry depends on finding a way to leverage the scale of markets like China for your competitiveness going forward.
Bill, thank you, sir. Bill Russo there, founder and CEO of Automobility.